Maybe this is going to happen again, as it's happened every single time without exception. Every time credit collapses, gold goes to infinity in terms of that credit. There will not be an exception this time. The only difference this time is this time it's global, and this time it's everything, and this time there are no escapees.
So a close above 50, just from a technical perspective, would mean a much higher spot silver price. It still doesn't come close, again, to the fundamental value, but success does beget success. And the higher that goes up, and remember, we've had a lot of silver stackers that have been touting the silver gold ratio for a very long time.
Throughout history, every credit collapse has ended the same way, with gold and silver reclaiming their role as real money. What we're witnessing now is not an anomaly, but a global repetition of that pattern. This time, it's everywhere, and no nation can escape it. As confidence in paper credit evaporates, consciousness shifts fast. That's what hyperinflation really is, the sudden realization that what people once called money was only debt. The world's monetary system, built entirely on this fragile illusion of credit, is unraveling, and gold is once again rising to its rightful place as the ultimate measure of value. Lynette Zang and Rafi Farber, two of the most insightful analysts in the precious metals world, explain that silver, while often seen as secondary, will play a crucial role in what's coming. Silver's accessibility, barterability, and historical 15-to-1 ratio to gold make it indispensable in a collapsing credit regime. When fiat dies, it's not speculation, it's math, history, and monetary law converging again. The zombie economies are already here. Gold and silver are your protection. Stay prepared, and like, subscribe, and share to stay ahead of this historic monetary reset.
Do we have a long way to go? The answer is yes and no. We have a long way to go in terms of consciousness. This is, sort of like a monster, maybe roaring in the background and you turning around and saying, what was that? And maybe you were a little bit scared and you think that you don't believe in Bigfoot, but maybe there is a Bigfoot and you don't know for sure, and you're not going to discount all of the theories anymore. But in terms of time, I don't know if we have a lot of time. We have a lot of consciousness changing, but consciousness can change very quickly. That's what hyperinflation is. It's one day credit is money, or credit works, and the next day it does not. And the main point that I want to hammer here is that when gold does things like this, there is the general confusion among the mainstream media. They're like, oh, gold, we don't know why it's going up, but it's generally a safe haven asset and an inflation hedge, and that's why it has historically done that, and so people are going back to it because they always have, and we don't have any other answers other than this is tradition. That's not why. The answer is that gold is money right now. It always has been money, and all the other stuff is credit, and credit is based on money. The purchasing power of credit is based on money. You cannot have credit without it first being based on money, and all the other credits are credits based on the main credit, which is the US dollar, which is based on money. Everything connects, and that's why it's described as an inflation hedge, because it's just money that isn't inflated. And I would challenge the viewers of this show, and your viewers generally, and my viewers and Lynette's viewers, to play this little experiment in their head. Instead, in any sense that you could use the word dollar, or sorry, that you could use the word money, instead of saying the word money in any sentence that you say or any sentence that you hear said on the media or from your friends, instead of the word money, just instead of the word dollar, instead of the word money, just use the word gold or silver. Just use that. And then you'll see how everything fits into place. You'll see how the gold and silver are the money. They're not an inflation hedge. They're just money that's not inflated. And as credit loses value, it loses value into money itself. That's what's happening here. The mainstream media doesn't get it. The people don't get it yet, but they think that maybe Bigfoot is real. Maybe the stackers are not totally insane. Maybe this is going to happen again, as it's happened every single time without exception. Every time credit collapses, gold goes to infinity in terms of that credit. There will not be an exception this time. The only difference this time it's global, and this time it's everything, and this time there are no escapees.
Yes, the answer is yes. And I always say that I think everybody should do what the smartest guys in the room on any given topic are doing for themselves. And so since 2008, we have seen the global central banks pile into gold, and the last several years at the highest level ever. Now, when you look at a relative performance chart over, say, the last year or last 200 days, you see, I believe that we are in general in the melt up phase of this trend cycle. But what you also see is that gold and prime and silver, silver's outperforming everything at the moment. But while everything is rising, you're seeing a rise in the spot silver and the spot gold markets at a significantly higher level relative to the performance of anything else. So what I think that's moving those markets is the smart money. And I think that that really started at the beginning of this year when we had this huge influx of the physical gold and physical silver into the US. So I think that this is nothing new. I think it's just becoming more visible, and that it will now trickle down to more of the masses. So a close above 50, just from a technical perspective, would mean a much higher spot silver price. It still doesn't come close, again, to the fundamental value, but success does beget success. And the higher that goes up, and remember, we've had a lot of silver stackers that have been touting the silver gold ratio for a very long time. To me, that's not a trade. That isn't why I would ever buy silver, because for me, it's about functionality. But I do believe that we are going to be closing above 50. And then just from a purely technical perspective, what that means is that all those sell contracts up at 50 have been used up. And then I would expect to see it much higher and more participation in mainstream. I mean, it's easier to buy an ounce of silver than it is to buy an ounce of gold, but you need both. You can't go one way or the other. And even when they both hit their fundamental value, well, wow, at that point, everybody's going to know how crappy, dollars are, or euros or shekels or wherever you are. And they're not going to want to convert back into that.
Silver's still not doing so well. It seems like it because we're at 50, but what's a dollar? If you look at any other ratio of silver in 1979, 1980, where we were back then, silver relative to stocks, silver relative to gold, silver relative to commodities, it was all much, much, much higher. Back then, we're still about like 82, 83 gold to silver ratio. In terms of just individuals, why would they buy silver? That's just because they can't afford to buy gold anymore because it's too expensive. So instead, they buy silver. Why I started stacking silver, two reasons. First of all, I wanted enough to get through any kind of zombie apocalypse. Not literally. I don't think there's going to be zombies. The zombie bat in my background is mostly for illustrations, but if somebody comes behind me, I have a camera because I can see. Right, thank God we're doing this interview right now, so nobody can murder me because I have a zombie bat and I also have a gun on my side. Silver is going to spike as it does very quickly. Every time it spikes to the same ratio. It spikes to 15-1, gold to silver, because even before we get to gold, if we go back all the way to 1873, what happened in 1873? They call it the crime against silver. Why? Because the monetary standard back then, before 1873, was you give the mint, the U.S. Mint, what was the amount of silver? Some fixed amount of silver, and then you would get a certain amount of dollars, and that was the silver standard of a dollar. It's in the Constitution somewhere, some amount of grains of silver. I don't remember what it is, but it was constant, and that was the definition of a dollar. So that gave the monetary demand for silver. People would deposit their silver to the mint, and then they would get dollars that they wanted to spend, because dollars would increase liquidity, because paper cash, as long as it's honest, is more liquid than silver coins, because if it's damaged, you can give it to the Fed or whoever, and they can give you a replacement bill, and it has 100% of the value, whereas a silver coin that is rubbed off is going to lose its value no matter what, because it loses weight. And there's nothing you can do to stop that. You can do things to mitigate it, but you can't stop it. So honest credit is always better than money, but money is always better than dishonest credit. And the question is, when does money override dishonest credit? When everybody realizes that the credit is dishonest, and then the money goes back to 15 to 1. So eventually you're going to get to 15 to 1. And the two reasons why I bought silver is, one, I want enough silver to get through a zombie apocalypse. Not literally, but some kind of situation where the division of labor is breaking down, and I can spread money into my immediate surroundings to sort of like, give a CPR to the monetary system in my immediate surroundings. And the other reason is, any extra silver that I have, I would exchange for gold in a 15 to 1 and then figure out what to do with it later.
So I'd like to make a little comment on the zombie apocalypse, because you said not literally, but the reality is that the governments are zombie governments. They're all underwater. The central banks are zombies. The corporations are zombies. So it is actually a literal zombie apocalypse. It's just not this painted guy, walking like that. And that is, your gold and your silver are your protection from this zombie apocalypse. But make no mistake, I had somebody that was interviewing me one time, and they said, oh yeah, a zombie apocalypse. I said, well, actually, that's an accurate statement, because these look, the Federal Reserve, for now 4th year. Now, remember, they print the money for free, and the difference between what it costs them and what you have to pay for it to get $100 or whatever, that's their profit. And they've been unprofitable and unable to share any gains with the Treasury for now in almost 4 full or 5 years. So you got to understand, this is a zombie apocalypse. It just doesn't look like the TV show, right? Where you've got these ghouls that are running around. But yeah, it is absolutely a zombie apocalypse, and gold and silver are your bullets. And I think, ratio trading, do I think that we're going back to a 15 to 1 or 20 to 1 ratio? Well, we go into hyperinflation, and I've done a lot of studies on a lot of hyperinflations. And you will for a while see that gap grow more narrow. But ultimately, when we hit that hyperinflation, then that gap widens. But what silver actually does, technically and in reality, is it holds your purchasing power intact so that you can maintain that standard. Gold expands that. So not only can you maintain your standard, but you actually have the ability to accumulate more wealth along the way, as all of this credit and all of these assets, real assets, some intangible, but real assets, lose all of that inflated value because the credit dries up. Well, if you have gold, you're going to be able to buy those assets when they are undervalued. Right now, they're extremely severely overvalued. So I'm not really a ratio trader, because for me also, it's about functionality. What am I trying to accomplish? And silver, I like all the different sizes. I like the constitutional silver. I like sterling silver. I don't care. Give it to me in any form. Because I would have no problem clipping a little bit of this to buy stuff, right? But it's, for me, that's about barterability. Gold is about wealth preservation, as well as putting you in a position to take advantage of the opportunities that always present during crisis.
The momentum now building in the gold and silver markets reflects a more profound truth about the financial system. The public's confidence is eroding, and institutions are beginning to follow the same path of fear and survival. As Wall Street embraces the debasement trade, it signals acknowledgement that the system's foundation is cracking. The same firms that once dismissed gold as a relic are now quietly accumulating it, realizing that fiat currencies have reached the end of their credibility cycle. Technically, the metals may appear overbought, but fundamentally, they remain drastically undervalued. This phase is not simply a rally, it's the early stage of a monetary reset. Confidence in government policy, in debt markets, and in central banks is fracturing. When that trust finally collapses, gold and silver will again perform their historic role as the bridge between the old system and the new. Let's get back to the interview.
I think that mainstream Wall Street firms are all just followers of each other, and they follow each other in a circle, and they just run after each other faster and faster. And that's what the business cycle really is. It's just a bunch of copiers following each other in a tighter and tighter circle, chasing each other's tails. It's like instead of one dog chasing its own tail, it's just a bunch of dogs chasing each other's tail. And once the dog sees that somebody's tail is, over here, it'll just change, and then the circle will go to another direction and start spinning in another area. So do I think that Wall Street will always chase the asset that's going up? Yeah, they seem to do that. That doesn't take much smarts to say, oh well, now gold. Well, let's do the experiment that I recommended doing at the beginning. Like instead of saying gold, say money. Instead of saying when people usually say money, say gold. When people usually say gold, say money. So if money is at an all-time high relative to dollars, then should you go after money instead of dollars? Yeah, I mean it's not gonna. You don't have to be so smart to do that. And do I think other people will start to chase money also when they realize that dollars are falling? Yeah, I think they will. And that is what hyperinflation is. It's when everybody realizes that they need money because they don't have any, and that the price of everything is falling in terms of money, and the price of everything is rising in terms of credit, in terms of dollars. So everyone will chase money at the same time. And at that point, we should be like, maybe now that everyone wants money, we should maybe buy some stocks. We haven't gotten there yet, but maybe I'll be the first gold bug or money bug to say, I think gold. I think it's enough gold. I think the whole banking system is now kaput, and let's go after some assets that aren't money now. Maybe I'll be the first one. Maybe I'll be like among the handful of first ones. I'll leave. I'm not married to being a gold bug or anything.
I'm not married to anything anyway, other than we are inside of the life cycle of this fiat money, whether it's US dollars or euros or yen. And so, again, I think that there is a lead that the central banks have put in place. And I think that Wall Street is starting to recognize it, because one of the big shockers to me was seeing how openly Wall Street is talking about the debasement trade. And so if they're now talking about the debasement trade, then of course we're going to see outperformance in spot gold and spot silver. But I'd like to emphasize right now that even though technically they are overbought, fundamentally, they are still critically undervalued. And who would know this? The central banks would know this. And I do think that Wall Street is starting to follow that lead. And I'd also like to take you back to the last shift in the early 80s, in the 70s, and then going into the early 80s, when Wall Street then as well got on the gold bandwagon and even established some funds with collectible coins. Wall Street's always got to make a buck. They've got to find what they can push up. And if they are openly talking about this debasement trade, that's going to continue now because there's no other option. And so there's no doubt in my mind, especially entering a hyperinflationary phase, if we are indeed in that melt up phase where you're going to see everything go up, well, that's when gold and silver on the spot market really perform. But nothing performs as well as when the public loses confidence, and we're seeing that more and more. And that question of confidence here in the US, the confidence that the government can come to terms and actually work on something together. Never have I seen it this divided. And what that does, whether it's politically intentional or not, is it further erodes that confidence level. And that's the only thing that's holding it together anyway. So it makes a lot of sense watching Wall Street beginning to participate and then encouraging their clients to participate because they want to live to play another day. And if you use up all the principal, guess what? You got nothing to play with. And so what will gold and silver do? What it's always done, create that bridge to get from one currency and that reset into the next currency. And I think it's beginning to be recognized. I don't necessarily think that that's a brand new thing because we've already been watching those big box stores here in the US like Costco and Amazon and Walmart. They're not carrying gold and silver because there's no demand from the public for it. So this isn't actually something new, but I think that it will, the rise when prices go up, that encourages more participation because fear of missing out. And I don't frankly care how anybody starts to get involved in the metals markets. Just get involved, just own it. And you know me, I'm a physical gal. We're in this transition.
The global financial tide is shifting faster than most realize. Confidence, the only thing keeping the system alive, is cracking at every level. Governments are paralyzed, central banks are cornered, and Wall Street has quietly joined the debasement trade, signaling the inevitable. The fiat system is approaching its breaking point. When institutions begin to hedge against the very currencies they depend on, you know the endgame has already started. Gold and silver are not just assets. They're the bridge between collapsing credit and the rebirth of real value. For decades, physical metals were ignored, but now, the same institutions that dismissed them are quietly repurchasing them, while retail investors remain asleep. This is how every reset begins. First quietly, then all at once. As confidence unravels and paper promises lose meaning, tangible wealth will define survival. Stay alert, stay sovereign, and remember, sound money always outlives paper lies. If you found this valuable, like, subscribe, and share to help others see what's really unfolding before it's too late.